Can you hear me? Great. So, my name is Rod Schwartz, and I'm going to talk about purpose through investment and disruption through entrepreneurship to fit the title of this talk. There are going to be a few things I'm going to address today. I'm going to give you some observations on impact investment. Then I'm going to talk very briefly about ClearlySo and what we do. And then most of the time, I'm going to focus on some examples of companies that are disruptive, impactful, profitable, and fast-growing. That's what I'm going to do today. First, the GIN says that there's $228 billion in impact investment. And I know that feels like a lot of money to some of you. It feels like a lot of money to me. But actually, it's really small when you put it in the context of globally managed assets by financial institutions. The blue is the assets that are not managed for impact. And our challenge at ClearlySo is to make that blue circle all orange. The SDGs help us because they tell us that to hit the SDGs, we're going to need somewhere between $5 and $7 trillion a year. So that's the demand for capital. But on the supply side, the question is, are there the enterprises out there? And some people think there aren't. Some people think that we don't have those sorts of enterprises, and they don't have advantages, in fact, some disadvantages. But I contend that that's not the case. There are some tailwinds that social impact investments have that normal enterprises do not have, and I'm going to list some of those. The first is they have moral authority. So at a time when all our politicians, all our journalists, all our media figures, all our clergy, and so many of the people that had moral authority or legitimacy are losing it, people who are genuine social entrepreneurs, I think, have that, and that gives them an important competitive advantage. Think about Anita Roddick and the Body Shop. Second, they have superior access to the labor pool. These enterprises typically don't pay as much for talent as the mainstream. And thirdly, and this is very important, they have the ability to sell their products at higher prices. Who in the audience has bought anything fair trade? Just raise your hand if you've bought anything fair trade, right? So economically, you've been foolish, haven't you? You've paid on average 27% more for something that doesn't taste better, isn't better for you. The only thing that it has is an embodiment of some ethical preferences that you wish to express through your purchasing, and you're paying 27% on average more for that. When you can sell your products at higher prices, you have a competitive advantage. And I think this is true in the capital markets as well. I think impactful enterprises now have the opportunity to raise capital at better prices or on better terms than the mainstream. In the same way that you're voting with your purchasing, investors are voting as well with their investing. And this is what makes impact investment work. One other thing I want to say about impact investment is that it's not an asset class. It's not some separate part of the investment scene. It's actually a third dimension to investing in the same way that risk and return are the first and second dimension. Investors are now trading off between risk, return, and impact. Now, very quickly, what do we do at ClearlySo in this field? ClearlySo has a mission, which is to bring impact to all investment. And we consider ourselves Europe's largest impact investment bank. What does that mean? It means we do three things. The first, which you can see here with number 1, is that we advise enterprises on how to raise money and how to position themselves for raising money. The second thing we do is we raise that money, and we take a fee for being an intermediary, a fee of anywhere from 1% to 6%. That's how we make our money. And the third thing we do, and the fastest growing part of what we do, is that we advise organizations that are raising impact funds on how to raise those funds and how to structure those funds. These are the three types of organizations that we work with. Growth enterprises, so organizations raising typically between 300,000 and £1 million. Organizations that are established, raising between £1 million and £30 million. In fact, that's gone up. And then we work with some organizations who are raising impact funds, as I mentioned, Some of these will look familiar to you, like European Investment Bank, but some will, Oiko Credit, but some will be a bit surprising. So we've advised large corporates like Sky and Marks & Spencer on impact investment fund programs. We started with angel investors, rich people, so helping them with growth enterprises. But now, the fastest growing part of what we do are institutional investors from across Europe, and they're mainstream institutional investors. It's probably 92% of the capital we raise each year. And we raise money from all of the blue, so the institutions operate across Europe, but we are able to assist companies in the orange. And for those of you who, let me be not subtle at all, we raise money for entrepreneurs based in Spain. I want to give you some examples now of organizations that are impactful, disruptive, and profitable that we have helped raise capital. In fact, this was the first transaction we ever did. We raised £97,500 for a company called Psychology Online. Their name made sense then. They delivered psychology services online instead of via the NHS. And it grew like topsy. It disrupted the market because it meant that people could access mental health services at a fraction of the cost of the NHS. It also saved the NHS a lot of money. And this company is now valued at 10 times the value that the people first entered the capital base. Another company is called Third Space Learning, similarly disruptive. What Third Space Learning does is very simple. It's arbitrage. It connects mentors in India with students in the UK who need mentoring services. The mentors in India speak English, and they are able to work for about, they get paid 3 times what they would make in India, and the people in London, the students in London, pay about 1/3 of the cost. This company has been so successful that it's now valued at 9 times what investors paid. The Body Shop you all know. I think no organization has been more disruptive in the consumer markets than the Body Shop. And it sold to L'Oreal for $652 million. The gentleman who purchased half the company at the early days paid £8,000 for his stake. £8,000, half of $652 million. That's a great financial trade. The company was very successful and I think highly disruptive in the consumer goods market. This has been one of our best successes ever. I don't know who's heard of Bulb, but Bulb is a renewable energy provider in the UK. It's the fastest growing energy provider in the UK, and it's also very successful. We did a £36 million fundraising for them last year. The valuation was 60 million, 6-0. They did another round this year. The valuation is 411 million. So a very successful investment, a company that has transformed the energy market, which was dominated by those crappy utilities that give us all miserable service at a high price, and they've been a really successful company. By the way, I understand that you have a company called Hola Luz in this country, which is really successful. If you're from Hola Luz, please see me after this talk. We do impact funds, but I'll be very quick on this. So many investors don't want to get involved directly in deals, and Palatine Private Equity is the first UK conventional fund manager that raised an impact fund. It was so desirable to institutional investors, they started raising and closed their fund of £100 million in just 6 months, and we advised them, and they're investing in a whole bunch of different companies. And finally, I always like to close with this slide. I don't know who's heard of Just Giving, but Just Giving is the world's largest charitable crowdfunding platform. I had the privilege to be their first chair back in 2003, when 2 immigrant women in the UK, one from Pakistan, one from Belgium, approached me to be chair of this company, which just basically facilitates online giving. The company eventually sold to a US firm for $100 million. The original price was $5 million, so investors made 20 times their money, But more importantly, during that time, $6 billion was raised over their platform. So it was a very successful investment, a very profitable investment, a very impactful investment, because $6 billion went to charity, and also it tremendously transformed the charity market for charity fundraising. It reduced their costs from 22% to 5%. And it was actually my experience with this company that led me to form ClearlySo, and its mission was to create 100 businesses like Just Giving. Thank you very much.